I use the analogy of cake and icing a lot when I'm sort of describing all things personal finance. It's easy to get mired down in all the icing choices, but really we could ignore the icing altogether as long as we have a delicious cake.
Mm-hmm.
That's what we really need to focus on. And for me, the biggest cake ingredient is health insurance. And I think most people, when they think of open enrollment, they think of health insurance, and then they get depressed by how unbelievably complicated it is to sort through.
And how many options there are. Like I've seen some employers where, you'll have the PPO option, you'll have an HMO option, maybe you'll have an option that has a health savings account associated with it. So it's a high deductible, high premium plan, an HDHP plan. And not only will you have those plans, but then you'll also have the gold, the silver, and the bronze. And so it's like quickly you go from having like 3 choices to 9 choices. And you're just like, I don't know what to do.
Yeah. And that does bring up that what we are talking about today is employer health insurance, policies, as opposed to, because I was like, man, if I only had 9 choices to choose from, because I get my family's health insurance through the Affordable Care Act, and there are roughly a bajillion choices there. So that does remind me that we are focusing really on just employer provided health insurance discussion right now. But yes, even 9 can be, the whole analysis,
it's daunting.
Paralysis by analysis, or whatever it's called. So I think we were talking about this earlier, that we both work with a lot of people in the tech space, and these are very analytical people, very focused on this idea of optimizing, focused on the idea of, avoiding taxes, reducing taxes when possible. And all this often translates into, I want an HSA. So I'm going to pick the health insurance plan that allows me to fund an HSA. Because let's say I have a family, the health insurance plan covered my family, so I get to put, I don't have the number in front of me, a little over $8,000 a year.
300 or something like that this year.
For 2024.
Going up every year.
Yep.
Yeah.
So it's, roughly 8,300 this year. It'll be higher next year. That's awesome. I get a tax deduction of 8,300, and then I can invest it, as we've actually discussed in a previous podcast episode. It grows tax-free, and then it comes out tax-free. It's triple tax-free. Woo!
Yeah.
Which is awesome, but that's not the end-all be-all of choosing your health insurance plan.
Right. So the thing that we usually will look at, because that is one thing, right? That's an amazing benefit that you can get with an HSA plan. You can put that money away and grow it, and you might actually get a match from your employer. Like we've seen often, they'll put $1,000, maybe $2,000 of that 8,300 in for you, which is really cool too. But what you really want to look at when you look at a plan, apples to apples, like if I'm looking at a PPO plan, or like a traditional PPO plan, I'm going to have a premium that I'm going to pay based on whether it's just me in the plan or me and a spouse or me and my family, right? There's usually going to be 3 choices. And then I'll usually do it by the pay period that you're automatically going to have with your employer. Sure. So you can take that and multiply it and go like, okay, here's what I'm going to pay annually for my health insurance costs. Right. And then you go look at, well, what's the deductible going to be on that plan for an individual and for a family? So for an individual, a PPO plan is going to have a lower deductible than a high deductible, high premium plan, right? It's just designed that way. But the other thing we want to pay attention to is one other component, is this thing called max out of pocket. And max out of pocket basically means I'm going to pay my premiums. If I have a really, really horrific event medically, and I go to the hospital, I'm going to fully pay that deductible. But then I'm going to do this thing called a copay. Where I'm going to pay a portion of the bill until I hit my max out of pocket. My max out of pocket is equal to my deductible plus my copays until I hit that dollar amount. So now I know what's my total out-of-pocket expense if things go badly for me in a year. And I say badly, but it doesn't necessarily have to be bad. Like maybe our family is expecting a little one next year, and we know we're going to have a hospital stay, right? Yeah. Well, a high deductible plan is going to cost us a lot because we're going to have a high deductible to meet that we're going to pay all of it until we're good, right? Versus the the PPO plan, I might pay a whole lot less that year by choosing that. So I want to know what those numbers are, and then I want to go look at the same numbers with the high deductible plan. I want to know what the premium I'm paying, What's the dollar amount I'm going to put into the HSA? I can back out the employer contribution, of course, because that's them giving it to me, which is nice. Then I want to know what's the max out of pocket, the deductible for myself, deductible for the family, and what's the max out of pockets.
Yeah.
And you'll just
Yeah,
see you're going to pay way more typically on a high deductible plan in any given year if things go badly versus a PPO plan. So then just
Yeah.
weigh that balance for yourself.